All right, what's happening, everybody? Welcome to our June 17th edition of This Week in Crypto. It has been another bloody and negative week for you bulls out there. For those of you who have been bearish and perhaps shorting the markets, congratulations on another major downfall in the crypto markets. But the majority of you were not shorting the markets like so many of our community members. Most of us are all waiting for crypto to bounce and show some encouraging signs. And we're going to show a little bit of everything, anything that might be looking a little bit encouraging, some of the arguments that are going to indicate that prices will continue to drop, and plenty more. We have some new unique charts that Maxim here will be showing off here in just a few minutes. Before we continue, as always, I want to mention that everything we discuss on these calls should not be considered investment advice. We are a data analytics platform that does our best to navigate the leading metrics that have indicated historically good or not so good opportunities for bottoms or tops or anything in between. And we never are here to give suggestions on what you do with your money, especially during a polarizing time like right now. It's vital for us to give that reminder and ensure everyone that we are simply here to give guidance on how to use our tools best for you to make your own investing decisions that are right for your strategy. That said, we're starting here with our data screener as always. And Maxim, it's been a not so fun ride with Bitcoin down 29% in the past week, Ethereum down 37%. And as we can see, lots of these top 100 altcoins are down at least 20%, many at least 30. Max, if you're chatting, you may be muted.
Yeah. Sorry, I missed you.
No problem.
Yeah, I was chatting. Did you ask me something? Because yeah, sorry.
Just wanting your general take on the past week and,
yes.
and what you've seen in terms of the price drops.
And I will come up later on with a few metrics on it. We're now obviously it means we're in the point where there is a rationalization, a lot of talks. There was an expectation for it before, but now we're obviously here. It means people talking about it, realizing and the leveraging, destroying bad debt. Zero capital is only one example, but it's obviously goes beyond it, and quite few players. Or even before, Luna USDT was the first, and then it brought to 3 Capital. Yeah, it goes further and further, like after stone in the water. The circles are spreading. And it destroys too risky, reckless, and unhealthy debt. And we're in the process. How much will it take time? How painful it will be? God knows. No one can say. If even we have all the data, you cannot really say precisely how much that has to be destroyed or how much pain has to be implied to finish the process. But once the process finished, yeah, that is one way to see the final bottom. The process is over, new cycle begins. And this one way. And another way, of course, is a reaction of market participants, which if we see the specific patterns showing a panic or desire to move fully protected mode, yeah, that shows as well. And they go together. And this is the main thing. And as I said, we will bring a few metrics. And the thing is, which is specific for our case, we've been, the moment I started doing Santiment, my focus was always on spotting the tops. And I think we've been quite good on it. At least from memory, we spot most of the tops. Now, spotting the bottoms is a bit more complicated task or different task. I don't know if it's complicated, but it's a different one. So bear with us when we are building up the proper framework, and eventually we will be able to do it. So what we're sharing today, it's not only in general, not investment-wise. It's always like this, but also specifically trying to come out with a framework in the current environment, the leveraging and destroying the debt, what would be the sign of the bottom? It's a tricky one. So we're all experiments. And this is the second reason to say not investment advice. Yeah? But we try to do our best. And I don't know, Brian, do you want first to go through the screener and then go to metrics, or you want to?
Yeah, why don't we jump into the first of the two charts we were discussing prior to the call, and I'd love to hear your take on everything going on here.
Yeah. Then if you now I would call it easy chart or way of looking into the things is mass participant reaction or attitude to the market, and this is what we start with. The second one is destruction of the depot, non-creative or new one. This is like they're separate parts in terms of metrics, but of course we observe them together. We start with the first part. If you scroll a little bit down this blue one, yeah, and increases. Yeah. So what we see here, it's aggregated founding rates. Yeah, we take it from, I think, 3 or 4 platforms. And then we built a very simple formula, and it shows you. For a very long time, we couldn't get to the negative territory. And this was concerning for us. Now we hit it there. For the perspective, if you extend the timeline and you take the last year, or even last 1.5 years.
So I'll go to January of 2021 up until now.
Yeah. Yeah, so it's quite a big one. And historically, we've had to this level not so many times. So it's a one part. On Ethereum, it's not the case yet. Yeah. The deepest one was in 21 in May, but we get there. So this is already when things are getting interesting. You should get a negative. Yeah, you can switch to 3 months back. We should get to such negative readings because they show one thing. The majority of the market in general thinks it's now more profitable to short the market. So if you are shorting the market, you have to pay for it. This is what the negative founding rate shows. And if you now switch to Ethereum, just to show the same metrics, I think, yeah, you can just go on top of exactly. So you will see the same, kind of similar. We went into the negative territory, at last. Now it's one thing, and together with this, now switch back to Bitcoin. And I always say, when in bear market, we should wait. It's difficult to be patient for myself as well. Should wait till the founding rates turn negative if you wanna spot or play the bot. Now, the second one is net realized profit loss. Can you check? Yeah, it will be somewhere a bit lower. Yeah, here's the one. So this is an interesting one. It means tokens which are being moved in Bitcoin on a network nominally as they moved, so to say, in profit and loss. The moment when they were moved to this address, be it 1 month, 1 year, or a long time ago, and the moment now when they moved, would it have generated profit or loss? And as in Bitcoin case, it's most of the coins when they moved. It is used for buying and selling, so we can relatively straightforward say, okay, the network is generating profit or loss for those long-term holders. Now, if you extend this one for 1 year, you will see an interesting thing. Yeah, this is the lowest reading for the whole year. We've never been so low. It's aggregated over 3 days, so you can see once you go back to 3 months window, you will see that this, so to say, network BTC holders realize losses. Yeah, it's just the last 3 days. A lot of tokens been moved there in the loss territory. And I
yeah,
assume,
and Max, I was also going to say this is the largest spike on that zoomed out perspective that we've ever seen, going back to the data beginning of our data in 2009. There has never been a time that we saw as low of a.
That's true. That's true. But we need to be a bit careful because it uses the USD price. So you should compare. We shouldn't compare apples to oranges.
Good point.
So yeah, that's why usually when I compare old times 17, 18, 19, I compare that prices, and now I don't go more beyond than 2 years. Maybe one day we can change a little bit formula. So for here, you see, okay, wow, this tokens, if they're moved in Bitcoin, it's most likely it's been liquidated here. And now connect the dots with the stories circling around with all the collateral used by 3Arrow Capital. So other lenders who've been supporting them, or where they've been invested and using for their leverage position, like on Deribit, on BitMEX, on FTX, all these positions been liquidated. So this is real Bitcoins, and they've been sold for whatever the purpose in loss, and quite a lot of debt, bad debt, has been removed from the system. Yeah, it's a very strong sign. And as we've just seen 2 minutes ago, we didn't have it for the last year. It's the first time. So do whatever you want with the metric hole. We still think what to do with the metrics, but this alone, negative and destruction of bad debt is good. Not everything is good. There will be few things which are still kind of could get better. But for this part, is good. And we are connecting now two stories: mass participant or market behavior and destruction of bad debt. It's happening. We can see it on data level, and it's a very, very good sign. I personally do believe crypto will show and demonstrate how, in decentralized way, where there is no central power, bad debt is being created, or push or pumps the whole market to the insane valuation and then being destroyed without anyone needed to print and bring new money. It will show how different decentralized system is working and how actually perfectly fine it can work. Yeah, people are crashed and many people lose the money. To some degree, it's honest. They were not educated enough with their bets. And it's harsh, but this is how finance market is supposed to be. It is supposed to be very harsh and actually punishing you all the time. Either with bad feeling, if you missed the pump up, or with bad financial statements when you were not able to sell on time. It's always hard. Yeah, it's never easy, and it's just an illusion or fairy tale that markets are easy. Crypto markets are very harsh. They're designed in this way, supposed to be this way. And we can lie to ourselves. They're simple, but they're not. Now we have it. We have this part. And the one part which is kind of missing, liquidations on DAI. I will show a little bit. I need to prepare, but actually, if you open another chart, I was showing.
Is it on this side here?
Okay, yeah, you can use this one. Yeah, this is also good. And this is a second piece we are observing. It's holders of USDT, not too big. It's below 100,000. Not too small. It's above 10,000. So it's active people who are active with their portfolio. This is how we define between 10,000 and 100,000 of USDT. This active participants. We want to see here increase of their holding. That would mean that they're convinced holding stable coins in the current market conditions is the best way to go. Once we see it, it's a very strong signal. If even it comes, or preferably it comes with the growing prices, market recovers and they start increasing their holdings, this is good. So this part, in our opinion, is missing, still missing. They don't do anything with the stable coins, they're fine. It's a kind of good they don't decrease the position, but would be preferably if they increase it. And please ask in the chat if way of thinking it's not 100% easy to follow, because it's everything based on behavior analysis, behavior of the mass market participant. It's not that everyone is constantly talking about. So if something not clear, ask in chat, we'll try to address it. And for that, I think, Pat, I would maybe stop it for a moment, let people reflect or come out with some one questions. And maybe after we finish the stream, Max or Gary, who will be summing up, can share links to this 3 chart layouts, and you can do it for yourself. And you can check it every day or every second day, whatever is your frequencies. We check it every day. Yeah, showing you exactly what I'm working with myself. Yeah. And I will prepare Gary in the meantime in the background a little bit for MakerDAO statistics, a little bit how depth is being created and destroyed there. It's also quite interesting.
Great, Max. Thanks so much. Yeah, I think this Tether chart especially is extremely relevant right now. Obviously, Tether has gone through its share of hiccups over the past month to 2 months, especially after the Terra USD collapse and USDT depeg down to 95 cents. You know, a lot of temporary panic sell-offs, and it really hasn't recovered anywhere close to that ever since that time. You can see when prices are accumulating, Bitcoin's price, you know, actually tends to look a little bit better. And then when they start to dump right here, you know, they usually do so prior to price tops. So you have time to react when you start to see a sudden dump off. And pretty much since mid-May or so, it's been pretty flat, if not down just a tiny bit here. So, you know, in terms of confidence that this chart conveys, it's still pretty low right now because of the fact that the 10K to 100K USDT addresses are not really accumulating. So the buying power for Bitcoin and other top coins is not showing any improvement just yet. That said, it's at least flattening out compared to what's been going on, you know, from this stretch here, especially through the first, what looks like all the way from mid-March until, I guess we could say, mid-May or so. And since that time, this past month, it's been a little more flat despite the continued drop-offs. And to look at other reasons why, we can, of course, look at Bitcoin whales, which is a similar template here. Let's see if I go to whales absolute values. So this combines, it basically takes what Maxim showed and jumps up a little bit toward higher whales, 100K to 10 million USDT coin addresses. Look at this drop off, and it just continues. And that's correlated probably even a little bit better with price from what I've seen. A little more in real time, so it's tough to react ahead of time when these dumps happen, but they do work as justifications and validators of why the price has dropped so much. So if you see that, you know, there's a big drop off, but Tether and Bitcoin, which I'll get to in a minute, are improving, that would be a nice bullish divergence. But right now they're going in tandem with the price going down, meaning that they are impacting prices and a major reason why prices have dropped off. You can see, you know, when Tether was accumulating, like I said, Bitcoin's price was going up, even when Bitcoin was going down. That's why, you know, when they're going down in tandem, that's an extra bearish sign. When they're going up in tandem, that's an extra bullish sign. So this 100 to 10K tier, if I zoom out to the last year, you can really see it better. You know, accumulation here and prices were going up. They peaked around late October and then started dumping. The all-time high hit about 2 weeks after that peak, and then huge plummet down ever since. And it isn't getting better yet. We're still seeing a continued drop-off. So this is going to be one of the primary charts to keep an eye on when you start to see, you know, a little hint of this and perhaps around a week of continued accumulation. That's going to be the sign that we're going to be okay. Or even, you know, Tether, like we saw here from early February all the way up until early May, they were accumulating, and that actually helped with the recovery a little bit because there was showing there was more and more buying power going on, but Bitcoin was still going down during that time. So we knew it could only last so long. So that's a little on whales. Let's see, I'll close these two, close that. And let's talk a little bit about the continued correlation. We'll keep it brief because we touch on this most weeks and nothing has really changed. The correlation between the S&P 500 and Bitcoin continues to be super duper tight. So we look, especially starting around March, you know, the green line would be Bitcoin, blue line is S&P, up, they go back down together. You know, here we started to see a little bit of a divergence where the S&P was recovering, but Bitcoin kind of stayed flat. It was, you know, right around 29 to 30K at that time. And then we see this big plummet just this week, which most speculate was related to the latest Fed decision to up interest rates here in the US, another 0.75%. This comes on the heels of a 0.5% rise in early May and a 0.25% rise in mid-March. So this being the third one, it was also the largest, doubling the amount that was risen in March and May respectively. And undoubtedly, this has played a factor in the S&P 500 dropping and Bitcoin kind of following it along. Some argue that Bitcoin's the one pushing. I don't think that's the case. I think the S&P is the one leading, and Bitcoin retail investors are kind of sending the price down along with it. And until that changes, until we see some retail investors drop out of Bitcoin because they've had enough of the pretty intense bleeding going on, we could see a little more until there's some positive signs coming from the S&P 500. Now we can also see a little bit of a potential breakout where Bitcoin just isn't following the S&P for an extended period of time, and that can be a good sign. And we were starting to see glimpses of it, like I said, in late May, but it quickly snapped right back into place. So, you know, many are now speculating, you know, with a 1.5% interest rate added back here in 2022, that at the very least, we're not going to be having to fear too many more interest rises. We could get one more. We may be pretty much where we need to be now. But it all depends on how inflation goes, because for those of you, whether you're in the US or not in the US, you've probably heard about the pretty crazy inflation rates here. I live in California. The average gas price per gallon is $7 for the cheapest of the three, the unleaded. And yeah, that's a lot of money, and we've never seen that here in the US before, at least from my recollection. So when I see those gas prices, I'm just going, you know, inflation is definitely not just this mythical creature we're reading about in these articles. You know, there are legitimate rises happening all over the place for everyday goods and services that we are used to paying a certain price for, and they're up 20, 30, 50% compared to usual. So that's the correlation between the S&P and Bitcoin. Let's close that, and we'll move on to some main Bitcoin metrics.
Brian, I'm just curious, as you mentioned it. Is it only gasoline, or like you can see it all over the all over the menu, so to say, everywhere?
No, I think it's a lot of stuff. It's food prices. I've seen rent prices skyrocket for a lot of friends. You know, in terms of restaurants, I've seen a lot of, you know, things that are normally priced at like $12.99 go up to $15.99, stuff like that. This is all anecdotal, of course, and I'm sure there's charts that would show a more broad picture of what's happening across the US. But LA is certainly feeling it as much as anywhere else, I would imagine, because prices have always been quite high around here. So percentage-wise, things go up $3, $4 when it might be only $1 or $2 in other areas. But yeah, California is definitely seeing, you know, grocery prices going up, gas, restaurants, you know, we even just had a plumber over about a week ago, and they were here for about 15 minutes, and that cost $150. Like, who knows whether that's related, but it's
okay. Well, that's quite a lot.
Yeah, it's pretty crazy. It's pretty crazy. So I'm sure others, whether you're in the US or not, you're probably seeing a little bit of that as well. So
I know, like from two countries, mostly I'm living in Switzerland, but sometimes I go to Germany, and there it's obvious. I mean, I remember the price from time before when I was living there, and it's changed. It's obviously changed. Here, in Switzerland, it's more stable. Some things maybe more expensive. Of course, except gasoline, it's obvious. Further, it's more stable. But yeah, interesting. Thanks for sharing. Germany is obviously inflation. You can see it everywhere, like no doubt. And I'm surprised of the financial politics. Well, I'm not surprised. I mean, it's a difficult situation for European Central Bank. They increase the finance rate. Okay, some of the countries will get bankrupt, or they believe so. They don't do anything, inflation continues, and the people, I don't know, they will go to the streets. Because if you don't do anything, I don't know what happens in Europe. It's not used to inflation.
Yeah.
The whole 20 years, or even more when euro existed, there was no inflation, and it's so obvious. And salaries are not increasing either. At least I heard that in America, at least salaries, and some, not everywhere, but in some areas, follow up. Here's nothing follows up.
Right.
So it generally gets less money. Okay, anyway, it was, yeah, I see that IP rights in the Philippines creates inflation. Yeah. Well, I can imagine if there is a so-called imported inflation. One of the reasons why Swiss Bank yesterday, by surprise, they said, okay, we increase finance rates. And they cut it, and they don't want this imported inflation. They want to keep, they even go a little bit risky side that the Swiss franc stays very strong, but at least they want to prevent inflation to come to countries. But in other countries where you cannot do it, yeah, so many imports, so much depends on import. It will be imported, yeah. Any insight on staked Ethereum? Yeah, I was thinking about work with our data scientists to collect some interesting data. It takes longer time, unfortunately. So we will have only our token at the moment possibilities. On the other side, you always have price. Some people say this is the only indicator you need. You look at the price, you know everything. And yeah, stake at on Lido is depegging a little bit. And it's actually the sign of the leveraging. If you have to meet your leverage or margin calls, you have no choice. You have to sell your collateral, whatever price is. And of course, there are bigger players or smarter or more lucky ones who will use it. So it's okay, you have to sell whatever the price is now. I assume the short move we see in stake at 95 cents, what this was. It is because of pressure for margin calls and everything through our capitals and companies around. So I would not maybe worry much. I was even thinking maybe I myself can try speculate on it and go stake it long. It is, however, might become, if you go into it and the price stay low, we might be forced to keep it unless it too starts and we can get Ethereum back, and then maybe there will be a long queue. People who want to, it depends on market conditions, of course. So if we go to staked app as a relatively easy way to get 10% on top of it, we should take into account we might be stuck with it for the next 1 or 2 years, whatever it means. Might be good. Sometimes if you are enforced to be with some assets for 2 years, maybe it's even good. But this is a risk. Yeah. The main risk is that it might be we'll have to hold it for 1 or 2 years. But it's a relatively simple way to get 5 to 10% on top of what you bring. You bring, what I mean by this, you buy 100 staked at with 95 real Ethereum, and at that you will get 100 Ethereum back. It's not Not investment-wise, but sounds quite interesting game. Yeah.
Yeah, thank you,
Max.
Max.
Yeah, I mean, it's free floating. Yeah, of course, but it under normal market conditions, one stake rate would be 1 ETH because everyone would arbitrage it immediately back to 1. And if we see it not 1, I mean not 1-to-1 stake rate to ETH, the market is under heavy stress. That's what I mean. Yeah, it's free floating, and this is the reason why the price is not 1-to-1. Okay. If state, yeah, just reading because there are some yeah, state liquidity completely dries up, and so the point when it becomes an extremely intensive buy. Yeah, Jakub, this is what I mean. Yeah. Because it will be converted to ETH at the moment we have merge. So, but this is a question of time. And as we know from Ethereum, the two Vitalik 2 vision generally, some things takes longer than expected. Okay, Brian, continue. Otherwise, somehow today, maybe it's a good day. Maybe it's a special moon phase. We talk on a little bit different topic.
Yeah, thank you, Max. I appreciate that explanation about stake depth. It's been a topic I've been curious about as well. But for everybody who is wondering about some of the top leading Bitcoin metrics out there, if you are a Sandbase Pro member, you have access to this article that was just dropped yesterday. In fact, only about 8 hours ago. So all of these metrics are quite fresh, and they go over the latest and greatest with where we are in this dump, how much longer it may last according to some of the top alpha that we have. I highly recommend checking it out on the insights.santiment.net page. If you don't yet have a Sandbase Pro membership, remember that you can get a week free, and that free week will allow you to explore everything that the normal paying Sandbase Pro members enjoy, including these types of articles and some of our Sandsheets models that we'll cover here in just a moment. And of course, private chats with us and other Sandbase Pro members in our channel, where they're constantly going over some of the capitulation metrics to look out for, and when we might be seeing an eventual breakout here. So highly encouraged there. And I'll do a brief synopsis now on some of those key metrics. I'll keep it kind of brief because I want to give time for altcoins. And because we just wrote about it in that insight yesterday. So for starters, let's take a look at circulation. And this is the 1-year view. And we notice pretty clearly that it's moving in the right direction. I'll put it on 30-day average, 30-day moving average, and check that out, guys. So in the past, if we're going 1 year back to June 2nd, 2021, which is a little more than a year back. I wonder what, hold on. Make sure this is exactly a year. That's better. So yeah, we go back to June 16th. Circulation was on average around 157K. It bottomed out here in August at around 109K. And fast forward to where we are now, 226K Bitcoin moving, unique Bitcoin moving per day. And that's a very good sign. If we zoom out here like we are, it's very clear that the amount of utility of Bitcoin in terms of the unique coins where each coin is only touched once, it's moving in the right direction. We want to see a rise in Bitcoin's movement over time. And that clearly is going to show when we look at the NVT chart here. I'll go to 120, that should be perfect. So check this out. It reflects perfectly ever since October, actually. As crazy as that sounds, because prices have moved down, we've actually seen a semi-bullish or full-on bullish divergence as of late, indicating that circulation is in a more than healthy enough position to justify a price rise. It doesn't always happen immediately. We've seen immediate dividends sometimes when the bars turn red and we see a quick drop. We've seen immediate dividends on the positive side. As soon as it turns green, prices go up. This was pretty good at predicting price would drop back in March and April. And then here is where we've seen some separation, where even though circulation is very, very good, prices are moving down. And over time, the longer the longer prices drop while circulation is rising, the more and more bullish we'll get. And if we don't get any better than bright green here on our 5-color scale, but according to this, we are in a very, very good position in terms of utility. Now, that's just circulation. The other big utility metric that we look at would be daily active addresses. And this is looking a bit more neutral. If you can see this faint brown average line, it's showing that our average amount of Bitcoin daily active addresses interacting per day is around 886K right now. We go back a year ago, and it was at 929. So a very, very mild drop off where it's kind of fluctuated, stayed relatively flat here, moved up a little in mid-May, and has now actually dropped somewhat substantially here in mid-June. And until this changes, neutral on daily active addresses, bullish on circulation, this overall between the two of them indicates it's a pretty good sign, and we're seeing enough utility for a rise, because you combine bullish with neutral, probably semi-bullish is the argument that could be made overall. Now, these are of course just two metrics that show more of the long-term value of Bitcoin, indicating we're still in a good spot despite all of this bleeding and market cap shrinking all over the place. But we've got a lot of other metrics we can look at that are more related to user behavior, right? And the types of trading losses they're accruing overall on the network, and how that's going to relate to a turnaround. So I've marked here the plus 15% and negative 15% lines in terms of MVRV. And as we've stated many times on these calls, what we look for are dips below this line, which we're in right now, or rises above this line, which we're very far away from right now. In previous times on the local tops, we've seen the MVRV go into super euphoric territory. And on the local bottoms, you can see in most of these cases, here we saw a small bounce, here we saw a big bounce, here we saw a small bounce followed by a flatness for a while until it went above 0%, and then it plummeted. And now we're back here again. So in most cases, there is going to be at least a small price rise to at least get MVRV back closer to neutral on the 30-day scale. And right now, we are in a historic opportunity zone where we've only been here 4 times in the past year. And remember that this doesn't mean that we're about to see a long-term breakout similar to what we saw in March 2020. It could be a very short-term thing like we saw just last month, or it could be a little longer term, depending on how the traders react once we do eventually see that short-term bounce, and especially whales, and see if they start to heat up after prices begin to rise, overall on the network. So on the MVRV side, we are sitting in a very, very good position right now, and we can see it on the MVRV model as well. Check out, other than Celsius, which is kind of moving with a mind of its own right now, most of these divergences are showing, it's of course going to refresh, but they are showing that we are in a opportunity zone that we don't see too often, especially for those assets that we're showing that were above that dashed green line. It means that it's in a top 5% best opportunity zone according to all of the other trading returns by respective traders on that network. So when the 30-day MVRV, let's see if a few of them are compiling, not just yet. When the 30-day MVRV is below 15% for any asset, it's going to indicate that for that time frame, it's in a very good opportunity zone, and it's compiling that same calculation for 1, 7, 90, 180, and 365-day MVRVs to give us an overall output of trading returns across multiple time frames, and whether there's enough bleeding to justify we're in a historical buy zone or a historical sell zone. And we are in a historical buy zone. It certainly doesn't mean that things are going to turn around on a dime. I've seen this model show bright green bars like this for a couple weeks before we finally see a turnaround. I don't think it's ever been multiple months. Like when we're seeing this many greens, there's usually a jump within a couple weeks, but know that it can be a bit of a wait, and it doesn't always happen immediately. So you're seeing a lot of these compile now. If I go back to the 30-day tab, so most of these here, as you can see, are below 15%. I mean, compound just getting absolutely demolished at negative 41%, Wi-Fi negative 36%, DeFi especially has just been getting crushed. Ethereum, at negative 27%. When it's struggling that much, it's undoubtedly going to drag a lot of ERC20s down with it. So yeah, this is the full look at the MVRV divergence right now. You can see compound, like I said, curve. Ethereum is actually in there now. Scale and Wi-Fi. These are the ones that are actually above that dashed line and in a top 5% opportunity zone, indicating that they are underbought at these prices. So heading back, let's look at weighted sentiment. As you would expect, there's a lot of negativity going around on social platforms right now. This is the 1, 2, 3, 4, 5, 6, 7th week now. As of yesterday, this new week has started where we are seeing a negative sentiment overall on the network. This comes after a very brief stint in positive range, where a lot of people were enthusiastic about buying the dip here and got burned for it. But now that we're in negative range, another good sign that traders can be off guard if prices rise right now. We can look, sometimes it doesn't always work out, like right here. Sometimes when people are negative, it helps fuel the rallies. Most of the time, I'd say, in fact, this is a more ideal setup for a rise like this, and this is more of an anomaly. But you can see, back here too, going back to last year, 1, 2, 3, 4, 5 straight weeks where traders were very negative about Bitcoin, and then boom, we see this big breakout. And then eventually, of course, we saw that all-time high in November, and look how euphoric everyone was. This would be something to avoid. If people get too optimistic, let's say, later today, there's a mini breakout and suddenly people get positive, you'd prefer not to see that. You want people to stay negative and doubt that prices are starting to rally. So another good sign there to go along with MVRV and circulation. As far as supply and exchanges, more of a long-term metric, but look at how much it's been plummeting just these past few days. A lot of Bitcoin is moving off of exchanges right now. It looks like at the fastest rate since February or late January, early February, when it was dropping from like 11.7 down to 11.1%. Now, just in the past, it looks like 5 days here, or 6 days, if I highlight that. Yeah, another 0.52% of Bitcoin supply has moved off of exchanges, indicating there is less risk of a future sell-off. So that's a solid sign there. We want to see less and less Bitcoin on exchanges because that is how sell-offs are going to happen. Without as much Bitcoin on, there's going to be more limited risk. So you want to avoid things like this. That was a bad sign, especially going into a big price drop. The fact that supply was moving back on, that was foreshadowing that we might see a further drop, which we did. But this time, on this drop, we're not seeing more Bitcoin moving back to exchanges. We're actually seeing people say, all right, I'm going down with the ship. I'm going to take my Bitcoin off and just let things ride at this point. So we touched on whales. Not a great sign there, of course. We still want to see a little more accumulation going on than what is happening right now. Exchange flow balance take a look at this. Tons and tons of outflow that lines up with what we just looked at on supply and exchanges. A huge spike on the 12th, another one on the 15th, and then another one here today with another 47.4K of Bitcoin moving off of exchanges. So yeah, overall, good sign on the exchange flow balance and supply and exchanges end. We touched on network realized profit loss. This was the lowest spike ever in terms of network realized profit loss, but Maxim summed it up well and said, you don't want to compare apples to oranges because this is in USD value, and the USD value of this spike is going to be much lower than 2015 if there was the same amount of Bitcoin moving off. That said, it's still a very large spike and something that should be noted given just how much realized loss is happening on the network right now. Development activity continues to look pretty neutral. Social volume. So let's take a look at the amount of discussion that's going on related to Bitcoin. We can see the big spike that occurred on the 13th and 14th after the latest drop off here in red. If I take this off though, one thing that I think is definitely good to see is the fact that social dominance for Bitcoin is back above 20%. I've just marked a line there, and this is the first time we've been above this line since mid-late February. And when that happened in mid-late February, look at how prices rose. Typically, we've found that historically, when discussion toward Bitcoin is above that 20% line, it's in a more healthy range, indicating there's more focus on that number one asset that really dictates where markets are going to go next. There's a reason we touch on Bitcoin so much on these calls, not because we're Bitcoin maxis. We're definitely not. It's because prices are going to live and die based on what is going on with Bitcoin and how healthy this specific network is. So when there is a lot of discussion related to it, like we saw, last summer from June all the way until mid-August, look at how prices were able to bounce. When it actually went below, look at how prices stagnated because everyone was getting euphoric about, Dogecoin and Luna at that time. Funny to say that in hindsight now, but when altcoins are the obsession from communities, it usually is indicating some greed and euphoria is going on. And then look how social dominance.
Brian, just for fun experiment, if you change here BTC to Luna, let's see how much dominance. Actually, I didn't check them.
I wonder if we're going to get these metrics because we switched.
Not these metrics, but just to see social dominance. This should work.
Let's see.
Wait, so now this is a new Luna.
Yeah, that's what I'm saying. It's Luna 2.0, so we probably won't have it. We
they
could
made
check
our research.
Terra USD.
Yeah, maybe, yeah.
That could possibly work.
So how was it? Oh wow! Just look at this dominance. Yeah, well, okay. We need to build a chart layout where I aggregate some values because they make it. But what was it on top here? Dominance.
It looks like it peaked all the way at 7.3%, which is insane for a stablecoin.
Yeah. So yeah, you should see it like
Terra USD, Terra Classic.
Yes, it literally means every 14 or every 15 message was about.
Yeah, that's an.
Well, okay, at that time, yeah, when it was finally crashing.
So here's Luna Classic. This was Luna 1.0, and we can see the jump went all the way to 21.6% here after that huge drop off in mid-May.
Yeah.
So yeah, I mean that clearly was a sign that everyone was talking about it, and obviously prices haven't recovered. It's a far cry going from an all-time high here in early April, and this was while the rest of the markets were struggling, by the way. So everyone was celebrating Luna being the one or at least one of the only popular assets that was actually rising, being up at 119, and now it's currently sitting at 0.000059. So, you know, if I shift drag this, that's a loss of, it just says negative 100%. So it doesn't even round down to negative 99.9%. But yeah, I'll go back to Bitcoin here.
Yeah,
Sorry,
yeah.
go ahead.
You go back. I just want to show that you can analyze this kind of interesting correlations or compare things, social dominance between different assets. And
Yeah.
it might be quite entertaining or sometimes even enlightening.
For sure, yeah. But yeah, like I said, social dominance jumped back above 20% for Bitcoin as of June 13th. So these past 4 days or so, we're looking to be in a healthier position in terms of the discourse related to Bitcoin than we've been in for a long time, with so much discussion related to altcoins, people being optimistic and trying to buy dips for coins that were hit way harder. That ended up not going too well. And now the focus is finally jumping back to Bitcoin as it tries to stay above this 20K support line right now. We also saw a spike in age consumed. I've been waiting for a while to report that some dormant coins have been moving, and that's finally happened here. We've seen the biggest spike in age consumed since January 31st. So we're talking about just about 5 months, a little under 5 months since we last saw this much dormant coin movement. And typically these spikes can indicate a price reversal. So we didn't really see a reversal here, maybe a very temporary one, but this was a very good sign here. When things dropped back in September, we saw this huge age consumed spike and then a huge blast off. On the other end of the spectrum, we saw a huge rise, then this age consumed spike, followed by a drop. This was more on the other end. It was going down and it led to a rise. So
that's true. Actually, good that you bring it up. I remember we did use it 1 or 2 years ago quite consistently to pinpoint volatility and reversals. And right. It didn't work. At that time, we had 5 examples and 4 times it worked. So it's actually quite good success rate. So we might be indeed not far from big taper or big reversal. Sometimes it just need 2 days. It depends. Now, when I'm thinking more about what's going on, it's possible if there is a wave of collateral deleveraging or destruction of bad debt. And today is a Friday. Yeah? On crypto market, you can do it over weekend. So maybe some players will, but on the weekend there is less liquidity, or it's interesting enough. Of course, not everyone is working on the weekend, and sometimes we see quite a heavy movement on the weekend. Maybe we will see it this time with Bitcoin too. Yeah, I could smell now some interesting events.
Yeah,
the coming Saturday and Sunday, where big players and whales try to eat sharks and they eat small crabs and so on.
Mm-hmm. We'll with less resistance during the weekend, as you said, because volume is going to be lower. Maxim is saying that the amount of impact that a single whale transaction can have will be much more sizable and may move markets, whether up or down. You know, seeing that token age consume spike indicates that there is some stuff going on behind the curtains right now, and big moves may be getting planned. But yeah, we can combine that with mean dollar invested age, which is another way of looking at how many coins are sitting in dormant addresses versus active addresses right now. And obviously, since the all-time high, as we would expect in a bear market, the dormant coin movement has been going, or the average age of dollars invested has been going up and up because dormant coins have just been sitting dormant. But if I zoom in here, we do see a little bit of a flattening out going on, very, very slight just in the last couple of days. And this may be correlated with that age consumed spike. So watch this metric closely. If it starts to move down for 2, 3, 4 days, that would be a tapering off period that we are waiting for. We want to see that line start to taper off, because historically, if I go to the last 5 years, we'll do 6 years, these waves, especially when things start to move down, that's when prices really skyrocket, even if it's a short-term one like right here, or something much more long-term like right here, or right here. You know, this was the huge bull run from late 2016 all the way to, I guess, January 2018. And then when it finally started to flatten out here right at the end of 2017, early 18, that was the signal that coins were beginning to finally be dormant again. And we went on that long bear market stretch where the mean dollar invested age line was going up and prices were moving down. It started to finally move down and prices moved up, at least temporarily. It's a very long-term metric, not a short-term one. So if you see like a single day or two where it's going down, that may not mean anything. But if you see it moving down for a week or a month straight, that's a signal that we might be finally getting out of this bear market. So let's watch where we're at here very closely and see if things change. All right, whale transaction count. So I reported in the mid-month report yesterday that we saw the highest amount of whale transactions in a year. I'll zoom out to a year so we can see that. This spike here was the highest in something like 14 or 15 months, indicating there was a ton of transactions that were valued at $100,000 or more going on. And you may, you know, instinctively say, well, this means they're definitely accumulating, because they're not going to possibly dump going into such a large drop. But in fact, you know, based on the supply distribution chart that we saw, it does look like some whales are reducing positions, even though prices have already been dropping so much. And it may be due to the reaction to the interest rate hikes and the overall inflation that's impacting the economy still. Whales aren't just simplistically going to buy whenever prices are down and sell whenever prices are up. They're still constantly reacting to real world events like the Ukraine-Russia war and COVID, all sorts of things. And it appears that this spike was very much related to that FOMC decision to raise interest rates. And the supply distribution is not going up along with these whale transaction spikes. So this may be a little misleading, but I'm not as optimistic about these spikes as a price reversal indicator as usual, due to the fact that the supply distribution is still going down right now. One final metric, and then we're going to move on to some altcoins. Look at the ratio of transaction volume in profit versus loss. So the blue line here is Bitcoin. When it's under, that means there are more transactions taken at a loss than profit. And when it's above, the opposite is true. The more profit transactions than loss transactions. We just finished a week where Bitcoin saw the lowest ratio in over a year. Ethereum, it was like almost 2 years since we've seen it this low. So clearly this is kind of like MVRV. It shows just how much trader pain is going on, and really shows a ton of capitulation, which if you're patient and you're a hodler right now, it's actually a good thing. We want to avoid when the bars are going super high, like this one perfectly marked the local top. But right now, it's continuing to show negative marks. This week has started with just a mild amount of positivity because Bitcoin is holding that 20K level, but Ethereum is still bleeding quite a bit. All right, so we'll end the main metrics there. We are
moment. There was this. I wanted to show a little bit on Maker, depth creation and destruction. If you were open chat layout I shared for Ethereum, I did say.
Let me check really quick. Was it this one? Nope, not that one. Probably the other one. So you want me to open Maker on this chart layout?
No. It's the right one. Wait. It is Bitcoin, and then there was another one for Ethereum. Did I share it with you?
I only saw these two links.
Okay. Then wait. Saved and share. Wait a second. So I'm sending it to you now. Channel. Yeah, you can open up.
Perfect. All right, so I'm going to switch to Maker here.
No need. You stay with Ethereum.
Okay.
Because Ethereum price as a reference is good. So if you go down a little bit, I added a few metrics, and remember you can do it everything by yourself. And go down. Yeah, so this two. One, and we will share the links to chart layouts. One is showing creation of new debt, and we take two main collaterals, wrap Bitcoin and wrap Ethereum, and you can see the level of debt creation. Ideally, at the bottoms, no one is willing to create debt. But honestly, this is one of bottom can come with or without debt, of new debt. Very important once we start recovering. Yeah, no one is willing to create new debt. This is in our current situation. If you ever want or not sure when the market starts growing, should I go long or not? Check just these two metrics. And I do believe when you don't see any new debt creation, means vast majority of market participants scared of creating debt. They see no opportunity, so they afraid they will be liquidated. So you will be like more active or risky than 95% of others. So this one, how to use it. And then the next one, chart, was just below this. Close here, and then yeah. This is a termination or liquidations. This is what William and maybe someone else. I don't remember if someone else asked. Or Harvey Williams, you asked. So this is liquidation of the same wrapped BTC and wrapped Ethereum. There've been some levels. I would expect to see more. Honestly, I would expect to see more. So it's not I cannot exclude we might see one more dive lower. Typically at bottoms, always stay without big up and down for some time. The level of debt destruction is quite okay, but would be more interesting to see what was on the May. This was very high level. And you see, after this liquidation of debt in May, we stay very long time, relatively neutral. Yeah, we could not pump. As we know now, for obvious reasons, this was not only Luna, but also some other players in troubles. But we didn't dump much either. So it's kind of, you experience strong pain and then you're relieved for some time. If this relief leads to the new rally, it's a question, but you're relieved. And if you want to build such metrics, you can do it. There are more. For instance, there are a very interesting one. I didn't know it because I want to make it up fast. Repayment of debt is also very good to see. Maybe we'll show it. Actually, we will revisit it. I didn't edit it yet. We will revisit this repayment of debt next stream. We'll see how the things are in 1 week. But for the time being, for beginning, because this is what we have, it's aggregation. Yeah, it's not as detailed as you could potentially look. Okay, it was being liquidated in each vault on Maker, or you can even check it on Compound to our. I think we'll build it one day. But for the moment, I think for market overview, this is quite a good set of metrics. And yeah, we'll share the link to chart layout after we're finished.
Nice, thank you, Max. These are definitely interesting and unique metrics that we don't normally look at. All right, Balresh, give me just 2 altcoins that I can take a quick look at. I know we went a little long with our normal analysis, so we'll try to just do a quick Cliff Notes analysis of a couple.
Okay, there was a request for more on Ethereum as well as Lux Rare.
Okay. Yeah, let's do a quick dive into the Ethereum metrics and see what we're seeing. Obviously, it's been pretty crushed, down like 47% in the last 30 days, at least according to last night when I was doing the math on it. But here we can see that circulation is up. If we go to our NVT chart, we do see that we're in a semi-bullish divergence area for a second straight month. This comes off of about 10 months of semi-bearishness or bearishness, where prices were able to go up and then dropped way back down during that stretch. But yeah, it's good to see that we are getting enough utility to justify a price rise according to this model. Oh, we're over here, that's why. So daily active addresses, there we go. It's a little laggy for a minute. Daily active addresses down pretty substantially. So utility-wise, there are less and less ETH addresses interacting on the network right now. MVRV, we are very low, as we showed on that MVRV model. If we mark 15% right about there, yeah, we're in super negative territory. If we go to the last, we'll do the last 3 years. So we were only below, yeah, this is the lowest we've really been since Black Thursday. And that was down at negative 46.5% before a huge rise. That was when Ethereum dropped to below 200 and then made a rise, as we know, all the way up to almost 5,000 by November. But yeah, we're very low right now, which indicates that there's a ton of trader pain. And historically, this is a good opportunity for at least a short-term price rise. Weighted sentiment looking pretty negative as expected, not historically so, but definitely in the negative range for a fifth straight week. Supply and exchanges is moving up a little bit, which is a concern. It's still way below where it was back in 2020, but we'd much rather see coins continue to move off exchanges like they are for Bitcoin right now. Whales, if we look at 10K to 100K, kind of chopping right now over the course of June, and in 100K to 1 million, it is continuing to move down. So not the best outlook there on the whale side. Exchange flow is pretty even at the moment. Network realized profit loss, similar to Bitcoin, we've seen some pretty big negative spikes. Nothing, all-time low related like Bitcoin is though. Development activity looking fine. Social dominance, it did peak about a week ago at 15% and is now pretty neutral. We'd like to see it move up a little bit, but Ethereum, just like altcoins, it tends to move up mostly when there's a big price rise. And there's obviously not been anything close to the semblance of a price rise for Ethereum lately. Not much for age consumed. We already touched on a ratio of profit to loss. And whale transaction count, we saw a very short-term spike on the drop, but it's starting to normalize again now. So yeah, Ethereum's outlook, not looking to be anything special right now. There could be a bit of a relief rally simply due to the MVRV being so low, but it certainly will be tough to time because it's basically trying to catch a falling knife right now. All right, Balraj, give me one more altcoin, please. I know you said it earlier. Okay, I just can't remember what you said. Lux, thank you.
Exactly.
Actually, that's interesting. I didn't want to push it for Lux, but we've discussed it just today, Brian.
Yeah.
In your night time, and one of our team members has done research. Maybe he will publish it next week. At least I asked him to publish it. And looks rare. The following is happening. You need to a little bit reduce that time, otherwise this wild metrics on the left side, they
It was a whale accumulation. I saw it in the chat. I just don't remember what the tier was.
So the thing is, there will be unlock in the next, I think, 3 days, after 3 days. And normally, I mean, what normally? In many cases, not all, but many cases, of course, unlock in a bear market, it is quite a pressure. Unlock to, I think, some team, or maybe early investors. And but on the other side, to avoid it, and so to prepare a ground for those gates and tokens eventually to dump it and the better prices, they might do some activities to improve the price. So they start doing it in advance. Maybe they've been doing some development. So what we saw, the price has increased, I think 50% in the last few days. And one specific wallet, this is the one we shared in our internal channels, have been accumulating like there is no tomorrow. Literally now owning almost 2 million looks. So we're considering, we're researching it more, but it's definitely interesting to look into, if even it could be short-term game, trying to ride the wave for what looks, I guess some market makers are trying to do. To enable interest and not to scare the participants from the sandlocks, and maybe and follow this big whale. I'm still thinking where we can share and in which way this whole set of information. Maybe it will be as an insight on our platform, maybe like for Sandbase Pro members, but it's coming. So from if you just look into the major metrics, it's not that you will find much. I mean, it looks like the same, move together with the market. And it increased in price, as you see, but there is not much which can reveal underlying mechanics, except it looks normal. Yeah, it doesn't look scammy what they're doing. I mean, it doesn't look like a pump and dump yet. But keep in mind there is unlock, and whatever activity is being done to pump the price up. It could be short-lived and very volatile. So act accordingly. Now, I did a summary without sharing many metrics, but literally, if you are Sandbase Pro subscribers, you will get it next week somewhere.
Yeah, thank you, Max.
Yes, but just because we discussed it literally today.
So if we look at circulation, it's staying pretty low. So like Max said, this price rise could very well be caused by a very small amount of addresses. As we can see, it's the 239th ranked market cap asset. So a small amount of addresses.
It's not really small. It's small compared to what you see on the left side of your chart. A little bit more slider, then you'll see it's not so bad.
So last 3 months, you'll see a higher rise for sure.
Yeah, it's kind of okay. Mm-hmm.
And then on the daily active address side, I mean, that more indicates that there is a relatively small amount of addresses. It's in fact moving downward as time goes on, but a few small addresses accumulating, like I said, can make a big difference. We should have MVRV if we go off of intraday. So we are still, the 30-day MVRV is still looking quite negative despite the price rise at negative 21.5%. So there can still be meat on the bone for a further rise while traders are in big pain. Weighted sentiment, it's showing a lot of non-believers right now. We're still very, very negative. Might actually be the most negative we've been. So that's very interesting to see despite the price rise. It means that there's not a lot of people paying attention right now, or they're just in denial that this price rise can continue. Supply and exchanges is still high, but the overall amount is relatively low, 4.5%. Even though it's moving up, it's not a lot. We got to as low as 1.78%, and now we're at 4.57. So that's a big increase, but the percentage that's actually on exchanges is relatively low. We touched on whales, exchange flow. We saw just yesterday a pretty big inflow spike, the largest since mid-May. So keep that in mind. Could be a bit of a short-term sell-off risk there. Network realized profit loss is fairly neutral. We're seeing a little bit of development activity, but honestly, this doesn't look like a very high developed coin in terms of its GitHub. So be a little weary there. And then social dominance, it does look like the discovery for it is moving up a little bit, even though it isn't showing a positive value on the weighted sentiment side. But it does look like there's a little more discussion than there has been. Age consumed, nothing to report there. Ratio of on-chain profit versus loss looks about even right now at right about 1.04. And whale transactions are pretty non-existent as well. So yeah, I think Max's analysis here is the key. We want to watch some specific whale activity right now on the Looks network. And if you're interested in this price rise and want to see if it can continue, look no further than the top transactions table and the supply distribution right now to see where we may be heading next. Let's see if I can pull it up really quick. Sometimes it takes a little bit of time for this table to load. So if we look on June 2nd and 4th, there were a series, quite a big series of transactions for 5 million plus here. At least 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 8 or 9 different whale transactions that equated to at least 5 million looks or more. The price is sitting at 0.26. So yeah, those are all $1 million plus transactions happening here. And this address, I'm trying to see some common ones. This one shows up 3 times. This one is a couple times. So yeah, there's like 3 or 4 addresses that are doing all the interacting here. And they would be the ones to research during some of your free time. You can actually pull up, you know, their holdings here. So this address, for example, going from 22,000 on the 15th to 47,000 from a single transaction. These are the kinds of things you want to look for and see if they're accumulating and if they're correlating with prices going up or down. So yeah, I think we've covered a lot here today. Hopefully this was interesting and educational for you guys. Make sure you're trading safe during such a volatile and uncertain time. And until next week, on behalf of Max and Max, I wish you all a wonderful and safe weekend. Talk to you soon.